Hello traders, my name is Tomasz Wiśniewski, I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. So let's look for decent trading occasions, and this is our first meeting this week. I deleted all the charts that I had last week, and we will perform live analysis of new instruments. I find this way a bit better, that you have a fresh outlook on the instruments every week, that you're not biased about the situation that happened last week. I think it brings the best results. Obviously we have to check the calendar, but you know that I'm not a fundamental analyst and I don't care about the calendar. I just need to know when not to trade, because when you have an important event for this for the currency, I don't trade that, and you shouldn't do that as well, because it's a lottery, the volatility is high, so I tend to avoid trading when, for example, like let's say tomorrow we have GDP from US. I wouldn't open a position on American dollar like 1 hour before that, right? Because it's a lottery, or a position on Canadian dollar tomorrow, which will be a lottery again. I like technical analysis. I don't like those spikes, volatile movements that are present on the chart. So as for present on the chart when we have a data, as for today, you can see that not much is going to happen, just ECB talk from two ECB members. We will have data overnight from Japan, retail trade. We'll have a speech from Reserve Bank of New Zealand governor, and tomorrow it will be all about the rate statement from Canada and GDP from US. I won't waste my time for more of this, because fundamental analysis for me is not relevant. You can see my account, my live trading account, which is having another good, let's say, good day or good week. Actually, May was one of the best months I had ever in my career, let's say career, and you could have those trades too. Because I'm having two trades on British pound to Japanese yen, and I'm telling you about this short opportunity since the price was, for example, here. I said that I'm waiting for the breakout of those major supports, and the breakout did happen, and I was even lazy with opening the short position, because I opened that just yesterday, and as you can see, I already lost like how many pips. Like I said, the short position should be opened here, so I lost 100 pips already. But I opened that position yesterday, and look at this drop from today. Boom, huge drop. Now probably we're gonna have a reversal. I just want to protect 1,000 euros from this, but in the long term, the profit is huge. The potential profit is huge. I mean, just let me move this. It's a bit annoying. The potential profit is huge. First take profit can be here, because you have lows from June and from August. Second area of taking profit can be here. You have lows from April, but the price eventually should get here, so you can have a trading opportunity for 1,700 pips, just for the patient traders. You will have negative swaps, but with this amount of pips, it should not be a concern. This is a great trading opportunity. Let me tell you why. Because all the odds are in the favor of sellers. Absolutely all odds are in the favor of sellers. So the probability of the price going lower is much bigger than the probability of the price going higher. And what we have here is a huge drop, then a correction, bullish correction. Then you have a head and shoulder formation, left shoulder, head and a right shoulder, breakout of the neckline, horizontal here, Here we have a small flag, breakout of the lower line of the flag, breakout of the long-term uptrend line, mid-term uptrend line, long-term horizontal support, mid-term horizontal support. We broke everything, every single important support we broke here. Then we tested that as a resistance. Then the price had no choice but reverse, and that's the current scenario. Most probably we'll have a kind of reversal here, so I want to take my profits and then I will try to look for a top of the correction and then re-enter this position again, because in the long term I think that in the long term this should bring us a huge profits, like absolutely enormous. Next instrument is Bitcoin. So first I'm talking about those instruments from the Trading Sniper video. So we have a Bitcoin which is bouncing from, which is aiming the lower line of the symmetric triangle pattern here. May was catastrophic. It started okay with new highs, but then we touched this. Well, we made the top here, horizontal resistance here, which helped to create the upper line of the symmetric triangle pattern, and then the price reversed from almost $10,000 to 7,000 seen now. The breakout, maybe the breakout won't happen now, but should eventually happen, and the breakout should lead us to the horizontal support on around 6,000. Like, it depends from the exchange, it depends if you have charts with weekend quotes, etc. But eventually this area around 6,000, $5,700, and that's our current target for the Bitcoin. Next one is American dollar to Swiss franc. This is a very clean price action setup. Maybe it's not so awesome like this, like British pound to Japanese yen, which is absolutely amazing. This is like the mother of all price action setups, but this one is also nice because we do have an uptrend, we do have a correction. This is a bearish correction which is shaped like a flag. The price did not manage in this flag, in this correction, the price did not manage to test the long-term uptrend line, which shows the strength, because the price stopped on a horizontal support, created a triple bottom formation, 1, 2, 3. Then the price broke the upper line of the flag, which actually triggered as a buy signal. That's when I bought, but so far it's a false breakout, but the price is trying to climb back again now as we speak. So my stop loss order is below those lows, and as you can see, look how safe I play on the market. 600 euros, this is less than 1%. I don't risk a lot of money. I eat with a small spoon on the market, and that's my approach to trading, and I think you could use this approach in your trading as well. Eat with a small spoon and the profits will come. Don't risk too much. I'm risking a little amount of money. So the price is trying to break the upper line of the flag again. Actually, they succeed with that. As long as we stay above the green area and above the long-term horizontal support, the sentiment is definitely positive. So everything looks very good here, despite the fact that we are on a small loss now, but this loss is nothing compared to the profit on British pound to Japanese yen, so that's also positive information here. So we have those three instruments from Trading Sniper video, and now let me analyze the rest of the instruments on the market. Not all, obviously, but at least some of them. We start with Australian dollar to Japanese yen. I need to change my template because I have my favorite one. First, I always start with the daily chart. Here what we had was this inverse head and shoulder pattern on a horizontal support here, but that was a false breakout, and now we're on a horizontal support here, and I think that this horizontal support should be eventually broken. So here we are, yes, something like that. Breakout of this will trigger us a strong sell signal. So that's the current situation here. Yeah, quite clean setup. So again, that was the neckline of this inverse head and shoulder formation. That was the false breakout. And another example how false breakouts are strong and reliable setups, because we had a false breakout above the neckline and then a strong reversal, and that is very reliable price action setup. I love false breakouts. In the meantime, we can see that British pound to Japanese yen is climbing back higher, and maybe my take profit, well, stop profit order will be triggered, and another 1,000 euro will be added to my account, which will be pretty sweet if you ask me. Again, we won't analyze all the instruments, we have only half an hour, so but we will continue as a week ago. We will continue analyzing those. A beautiful trading setup is on Australian dollar to American dollar. What we had here is a flag or a wedge. Wedge is a wedge. False breakout here. Let me check the Fibos. I don't think that there is a need for Fibos. You don't need to push with the Fibos if they don't work. Sometimes they don't work, they are not relevant. Delete. That's H4 on a daily chart. Well, on a daily chart also. Actually, as you can see, the sell signal was triggered somewhere here when we broke this long-term uptrend line. It's also the same kind of setup like on British pound to Japanese yen. Here, breakout of those two black lines triggered as a strong sell signal here. And now we do have, well, we were experiencing a bullish correction, but this correction ended and a breakout of the lower black. Actually, I need to change the color for you. It will be much better. Breakout here triggers us a super strong sell signal, which should be relevant in the long term and in the mid term. Oh yes, that is beautiful. So we had also this horizontal support for the past few days in the last week. Oh, that's Thursday, Friday, Monday, Tuesday. Broken support was tested as a resistance today. Yes, that is a very nice sell signal. Maybe I should trade it actually. We'll see. Swiss franc to Japanese yen. Next instrument. Correction here, breakout. The price should eventually go lower. Horizontal resistance. Yes, that's the sentiment is negative. The price should go lower, but the setup is not actually super clean, so I'm not gonna trade it. I'm not gonna leave this chart. I'm gonna change here. Euro to Australian dollar. All that breakout of the long-term uptrend line is dangerous. The target for this movement is here. But the thing is, I don't like this kind of setups because look, the drop here is huge. The sentiment is negative, but you need to ask yourself, where should I put a stop loss? And the trade should have good risk to reward ratio. And here in this case, if you sell here, your stop loss still have to be here, and the potential profit is here. So the potential profit is smaller than the potential risk, and even if this drop seems like it's gonna happen for sure, you shouldn't trade this, because you always need to think about risk to reward ratio, and you should aim for the trades with high reward and low risk. That's how professional traders should trade. So this setup is definitely not for us. This one, euro to Canadian dollar, is similar. As you can see, even lines are almost the same. So the horizontal resistance is almost on the same level. This one's supposed to be a little lower, but we're gonna delete it because it's not relevant. And also a trend line, which is almost the same. The trend line should be like that. Yes, this setup is a little bit better on euro to Canadian dollar, because we just bounced from the horizontal resistance yesterday, and now the price is continuing this movement. So the setup is a little bit better, but also after such a huge decline, I would be a bit worried to go with a short position. Like, I like to enter during the end of the corrections, and end of the correction was here. Now we just have we are on midterm lows, which for me is not the best place to trade. I don't like this. So you see, even there is a nice setup, everything is pointing into one direction, but this setup is not tradable. Why? Because at the end of the day, what is important is the risk to reward ratio, and you should always aim for the high reward and low risk. When the trade gives you the same reward as risk, this trade is not worth taking. It should give you a high reward and low risk. On euro to Swiss franc, there is nothing, but I got used to that. Euro to British pound, that's a very boring sideways trend, but if we go a bit closer, well, that's also boring. Euro to Japanese yen, well, Japanese yen, and actually we are expecting the strength of the Japanese yen in our yearly newsletter. Special edition of our yearly newsletter. That's the breakout of the neckline. That's the long-term uptrend line. Let me change the color for you. Broken of the breakout of the neckline triggers sell signal, but now we need to estimate where is the potential direction target for this. That looks like a potential target for this drop. So also risk to reward ratio here is bad, even despite the fact that this drop looks imminent. We should not enter this because of the risk to reward ratio. Oh, I'm sorry, I don't want to open new order. I want to open a new chart of euro dollar, the most popular instrument on the market, the most widely used. Also, euro dollar is in a free fall. That is also not a trade for me. I'm so happy that there are some other instruments, because on euro is not tradable at the moment. Here is this long-term support. It will be in line with a dynamic uptrend line. So if we look on a weekly chart, yes, that can be a nice area to buy. Either, yes. I want to see the Fibos. I'm wondering 50% Fibonacci, obviously. Yes. So guys, combination of that and that will be a good occasion to buy. So for example here, whoa, not by limit, what I'm doing, like this here, for example, here and here and here, for example. I would love to see this kind of setup. We'll see, maybe it will be double bottom formation or a V-shaped reversal or an head and shoulder formation. It does not really matter what we will get. I'm just seeing the price approaching super important horizontal support, actually combination of horizontal and dynamic supports. Everything will be in one place, so I'm looking forward for this, for the euro dollar reaching this area, and I want to see what the price will do there. British pound to Australian dollar, daily chart, breakout of the neckline obviously. Then the price is on a horizontal support here, support, support, support. But again, we are a bit too low to trade this. British pound to Canadian dollar, a bit of similar situation. So I want, it's all about the risk to reward ratio. So on many instruments we see the continuation of the movements that we saw recently, which I will repeat that again, but in my strategy they are not tradable because the price is too low. You see this kind of movements I don't like, because you can catch a reversal. Like for example here on, what's that, British pound to Swiss franc. The price is drawing a hammer on a long-term uptrend line, and this one is interesting because we had a hammer here, we had a hammer here, and we are about to have hammer here, and that can be a good one. But actually depends how you drive this. Here, I'm sorry, there's this resistance here, hammer here can be a good buying opportunity with the potential take profit on this orange horizontal resistance. So I guess like 134.70, but only if you'll get a hammer here. And that will be a good risk to reward ratio. So for example, hammer will give you 100 pips stop loss and almost 300 pips potential profit, which is good. So this instrument stays on my chart. Now, cable, British pound to American dollar. Also free fall. Also I don't like the situation because it's bearish, but you can go short and the price can reverse, having a correction, and you will be right because long-term sentiment will still be negative, but you will lose money because there will be a correction. So that is the worst place to trade. On some of the instruments with British pound it makes sense, like here or like here, but some of them it does not make sense, like here. New Zealand dollar to Japanese yen. We are about to trigger long-term sell signal, because the price is about to definitely break this long-term horizontal support, which was relevant since September 2016. Price closing here will be a super strong sell signal in the long term, but you need to watch out for the possible reversal, which can test the broken support as the closest resistance. New Zealand dollar to American dollar. Here is New Zealand dollar to American dollar, which is about to trigger also a strong sell signal. We need to go a bit closer because we need to be accurate to avoid false breakouts. Yes, as you can see here, that formation, my dear traders, is a pennant or even a symmetric triangle pattern because it started a few days ago, which can result with a bullish or bearish breakout. So far we have higher odds of the bearish breakout, but for the sell signal you need to see the price closing a day below the orange area, because those supports still can be defended, but price closing somewhere around X will give us a strong sell signal. And last but not least, instrument for today is American dollar to Canadian dollar, which is having a very I would say rough month. It was a bit of a sideways trend, but we went from the monthly highs to the monthly lows, then to the monthly highs again. And unfortunately this instrument for me is not tradable now, but I told you that last week. I told you that it's all recorded, you can check it on YouTube, that breakout of this upper line should trigger as a buy signal, and that is what is happening. The price is making monthly highs, is aiming the highs from March, and in the meantime, as you can see, American dollar is giving us some strength, and we are coming back to the positive side of the market, green side of the market on American dollar to Swiss franc, which is good, which was expected. And in the meantime, British pound to Japanese yen, they tried this correction, but they are on the back foot right now. We will see what's gonna happen here. It's a small warning that the selling pressure may be coming to an end, but I don't know. I will see what I will do with this fact. And with American dollar to Australian dollar to American dollar, but I think that this instrument is ready to be sold. We will see. Okay, anyway guys, thanks very much for attending this webinar. I hope you enjoyed this, and we're gonna see each other in half an hour, because we'll have a webinar about the Forex basics, and I hope you all will attend this webinar. Thank you very much for being on a daily analytical report, and I hope that you will find those tips useful. Thanks very much, and see you in half an hour, but in the meantime visit our Twitter account and our website alpari.news.